In the village, the peaceful village, the lion sleeps tonight. Well, hello. I'm going to have a look at the push strategy today. Hi, and a warm welcome to one and all. And for those of you who have not seen me before, my name is Langers. I am the overgrown child that is the scruffy trader. And what I'm trying to do is kind of put trading in the real world, maybe show you what I get up to throughout the day, and hopefully inspire you with your own trades. That's the idea anyway. So what am I doing today? Well, I had an email today from Yotam. And I really hope I haven't butchered your name, and a good salute to you. Just asking a little bit about the push strategy and how it's best to tackle the market with it. Well, it's a very simplistic strategy, and it can be used on most time frames, whether you're an hour, 15 minute, 5 minute. And the idea behind it is really to catch momentum. That's what it's for. Now, as with most strategies, it isn't a one-fits-all. That doesn't exist.
Are you serious?
You need to be able to read conditions and one thing and another as well. I know you're going to see the Lambo boy selling your courses saying, this strategy will make you a fortune. Sadly, it's not that simple. Trading is about learning how the markets work and then applying a framework to it. Now, the push strategy is a framework, but you need knowledge behind it to understand, because you need to know when it's the right time to apply it. It's like everything else. If you're using a moving average strategy, it needs to be a kind of trend or a momentum ignition within the market. If you just doing it willy-nilly, you're going to find yourself whipsawed and, well, it becomes a nightmare. And when you're in a flat market, you want to be moving further up the time frames, because the 5 minute etc. will just be bouncing around. And talking of things that bounce around, here's my favorite bouncer. Hello.
You have caused confusion and delay, and terrible trouble to my trousers.
Are you laughing at?
Your favourite bouncer.
Well, I love bouncing on you. I'm sorry.
Oh, that's disgusting.
Yes, things do get a little bit X-rated in here at times, but that's because we're over 21. So I'll have my coffee and I'll be quiet. Okay.
How does your missus put up with you? Must be my legendary prowess as a lover.
As I was saying, you need to be able to recognize conditions. Now, there's various ways you do it. I do it through a series of filters. In other words, I look at the strengths and extremes of the market, and then I pick a market, and then I'll work my way through it. And whatever the situation is, I'll apply the right tool for the right job. So let me fire up the screens, and I'll give you a quick idea of what it is I'm talking about. Now, this is today's strength sheet. This is the first thing I do to filter. Now, here's just pulling out what is essentially just swing trades. And that's recognized by this heat map. I always look at an ATR, guys. Look at the ATR to tell you whether it's a day trade or a swing trade. If your ATR is big, like what cable is, about 100 per day, you'll get a trade out of it pretty much every day. If it is low, sort of US Swissy for argument's sake, 45, it's going to take time to play out. So again, it just filters things out. These section here are the world drivers. It's, in other words, the world currencies. And you'll always get a day trade out of a cross of those. Okay, so that's what they're for. So what am I looking at? Well, the first trigger is I know the pound is the strongest, so there it is there. Okay. So I'm going to look for a market pitched against the pound. All right. So I'm going to use the pound as the base. Now, I'll always pretty much find something on cable. So the pound US is always on my radar. So that's what I'll kind of look at. But then there's two others here that I can look at. And they're both roughly the same. But why would I pick one over the other? Well, this is an average, and it's showing that the euro is lower down the scale than JPY. And also JPY has had a bit of a move, and I've already caught that one this morning. So it opens up this, something to look at. Okay, so that's my pitch, because they are roughly the same. So out of here, I can pretty much do a quick ready reckoner and think, all right, I've got two markets to look at, because I don't want to over swamp myself either. You know, I don't want to be looking at sort of 28 pairs all at the same time, hunting a trade. I want to filter it down to something that's manageable. So I'll pick two. And in this case, it's very simple. That's lower than what JPY is, and I'm pitching it against the pound. It's that one, and I pretty much trade cable all the time anyway, so that's the other one. Two markets. Very, very simple, but just filtered from here. Okay, and it really is that simple, guys. So let me have a look. So here we go. All right, now there's going to be a couple of pauses in it, because I'm going to show you guys the basic idea behind what the push is, and I'm going to trade it in front of you if it represents itself, which it is actually showing up now. There'll be a little break where I show the Scruffy Squad something extra to this, because there is a secret sauce to it, and you can trade it on its own, but there's an additional filter that makes it a little bit more solid. Okay, so what I'm going to do is I'll tell you what it is, and then I'm going to look to trade. Well, actually, this is pretty much ready now. Let's have a look at the other one just to see what's going on there. No, not as yet. So we'll stick with pound euro. Basically, what you're looking for is a 50 moving average, which is the blue one, an 8 moving average, which is the black one, and you're looking for alignment. So here, the price, the 8 are below the 50, so we're going short. Okay, and you need a confirmation. So bear with me a second. I'm just going to do a little bit of a chat for the scruffs, because I'm going to do this video twice. There's your public one and there's the scruff one. Okay, so bear with me, guys. Okay, guys, we're back. What we're looking for is a gap between here and a tag. So you can see the price has moved away. It's tried to go up. There is a gap, so it's moved away, and now you're looking for the retest, which is here, and then you're looking for your entry, and your entry is below this candle. So when this candle closes in a minute, we'll be looking to enter below this candle. Okay, so that's it. So what we're going to do is we're going to sell it. I'm just going to put our order underneath there. Fire. Just like so. Now we're on a 5-minute chart, so I'm not going to be overly greedy with it. So we're going to look at, see what the ATR is. In other words, the movement, how far you can get out of this. Now it's about 5 pips ish. So that's what we're going to target. 5 pips. Okay, just 5 pips. Because this is on a 5-minute chart. Okay. Again, you've got to keep your risk reasonable. The way you can do that, you can look at an ATR of the day, find some levels, hide it behind structure points. There's many different ways you can do your risk. Personally, I think risk and profits are two different things, and I treat them as such. And you'll see that over and over. And actually, if you look at a lot of big traders, they do look at it that way. There is a risk reward on every trade, don't get me wrong. There has to be certain criteria all the time that makes the trade, okay? Because your trade has to be worth going into market. It genuinely does. If it isn't, then you don't go in. But then you have buy-in points up to your stop. There's many different ways to do it. But stops, etc., are a subject on their own. But for me, if you want to know roughly how I do it, I am 2 structure points away from entry. Okay, and nearly everything I do is based on an hourly chart. All right, just so stops any of the sort of strange comments about risk. I trade my own way, reasonably successful. I prove that on a daily basis, and that's it. So what I'm going to do is we're just going to let this run out. Like I say, we're not going for mega bucks. It is a simple setup. The reason why I'm showing you it like this, I don't like rolling back the charts. I will trade the chart that is in front of me so you can see it play out. Because even if you are doing this on a trading view, you already know the outcome. I don't know what the outcome is on this. All I know is the rules are in place and how to apply them. And just to recap, before I let this play out, you are looking at 2 moving averages, a 50 and an 8. You are looking for them to be in alignment. In other words, if the 8 is below the blue or the 50, you will be short. If it is above, you will be long. And the price, when you're coming into the trigger, also needs to be in alignment. So in this case, we're going short. We want the price to be under the 8 as it is here. You are looking for a gap, which is there. It's not a great gap, but it is a gap. You can see daylight. You're looking for the first sort of retest and close. And then you are putting an order underneath it. Okay? And it is that simple, guys. It really is that simple. There we go. So let me come back to you when it's done, and we'll discuss it a little bit further. So that was that. And before I start rattling on more about what the push strategy actually was and what it means, I'll just quickly show you something. Just flip the screens back on. I said earlier on that I was looking at the pound JPY. Now, what you're looking at here is a window of the world of the 5%ers, which is a prop firm that I trade. I trade a set of funds for a company, and I do a profit split with them. Now, I'd already looked at the pound JPY, which is there, and as you can see, it did quite well this morning on pennies, 60p a position, and I still got 75 quid out of it. Just simple stuff. And that's using very similar strategies to what you're looking at just here. So it can be done if you are watching what you're doing and being a little bit careful. So let me just flip myself back on and I'll tell you a bit more about the push.
Well, we're waiting.
There we go, guys. Very, very systematic, simple setup. Came in, did its 5 pips. Why did I say 5 pips? Because I'm working on the ATR of the time frame. Don't want to outstay my welcome. You can use the same process on, say, an hourly chart, and then you might go for 10 pips. If you're doing the same process, it's on a 4-hour chart, you might go for 15, 20 pips, that sort of thing. Just look at the ATR and be reasonable with your decision. Now again, you can look at it and it's doing the same thing. So there, you then look to go on the next opposing candle. And why do I say opposing candle? Because you want it to be going in the direction of your trade. So up here, if I recap what I've done, I was looking for a gap, which was there. I'll just open this up a bit so you can see it. There it is there. Now this was a bit of a naughty trade, to be honest, because there's a lot of dirty candles here. But you stick to your rules. There's the gap. I was then looking for the retest, which was here, of the first opposing candle, and then you're looking to get in sort of certainly within the next 2 sort of thing. And there it is there. That's simple. Look at the ATR, get an idea of target, and in you go. Simple, simple stuff. So it was just really a bit of a recap as to what the push strategy is. What I'll say about trading lower time frames is you may have seen some of the scalping videos that I've done. I'm not a lover of scalping. I'm genuinely not. But what I do say is score, score, stop. And what I mean by that is just get a couple of bites of the cherry and then leave it alone. Let the market calm down a bit. Because inevitably what happens is the markets rotate all the time. And they go in waves. So you catch the first wave, you catch the second one. Now if you're late to the party and there's already been a couple of waves prior, it'll be priming to go the opposite direction for a little while as people take profits and opposing views to the market. Got to be a little bit careful, because if you look at sort of ABC patterns, Elliott waves and all of this sort of thing, it's all done in a wave. And they're normally based between 3 and 5 waves. Now, you can't keep something going indefinitely. And that's why I say score, score, stop. In other words, 2 bites of the cherry, cut and run. And if you do that a couple of times a day, you'll build yourself up a little wage. So I hope that makes sense. So a nice easy one for you today, guys. By all means, keep the comments going. It's great to see the channel grow. So subscribe, like, share, all of that good stuff. And keep telling me your thoughts. And I'll always try and help you. I genuinely will. So trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.